That's it. Now we're on.
Perfect.
Yeah. Thank you guys so much for coming. So you live here in this town, but Mirza, where are you from?
So I live out of Aliso Viejo. It's near Irvine in California. So kind of between Los Angeles and San Diego.
Okay, cool. And you guys, you flew in
On Wednesday.
Wednesday.
Yeah.
What have you guys done? What have you enjoyed Southeast Idaho?
Yeah, the weather is interesting because I'm originally from Chicago, so it's nice to see snow again. The scenery here is great. People are great. It's always nice to come in here.
That's awesome. Well, it's good to have you here. So, McKay, you told me about Casa Shares quite a while ago. I mean, well, I guess maybe last year.
Yeah.
And I was pretty excited about it. I love the idea of it. And so you guys are the founders. So one, congratulations on such an awesome idea. Like, I've told people about it.
Thank you.
Everyone I've told, they're like, that's incredible. Like, my kids can have access to real estate now. So can you guys, and I don't know who wants to, but can you guys just talk about Casa Shares and what it is and what your vision is for it?
Yeah, absolutely. You were one of our first investors.
Oh, sweet.
So it is kind of exciting. We're at a fun point right now, but both of us have backgrounds in real estate. I worked for a company out of Seattle that mostly had student housing. We had lots of investors, but those investors had to be accredited investors, right? So we would take a dentist that was worth a couple $1 million, and within 5 years, they were worth $30 million.
Yeah.
And we took their money, we invested it in properties, and then they would get their dividends and they'd reinvest those. And all of a sudden they started this snowball that was so much more valuable than their dental practice, for example.
Yeah.
And so I got to witness a lot of people that were already pretty wealthy individuals that became extremely wealthy,
Yeah.
right, through real estate. And the more that you focus in on millionaires and billionaires, I haven't met a single one who isn't heavily invested in real estate across the board.
Yeah, that makes sense.
So it's a catalyst for wealth.
Yeah.
And there are all sorts of different directions you can go. There are some people who are the fourplex people and others who like to do fix and flips and lots of different ways to get into real estate. But there's a big problem in our country, and that's 90% of people are non-accredited.
Yeah.
And so accreditation, meaning that you have a net value of $1 million or your household income is $300,000 a year or more, most people don't fall in that category. And something that I learned through a few real estate deals, and I like to say that I've been very blessed in my life, but when I hit that point of accreditation, I was quite interested to see how many people came out of the woodwork saying, hey, get in on this investment. And vice presidents of banks were calling me and saying, hey, did you know that we offer this to accredited investors? And there are just all sorts of things that 90% of Americans don't have any access to.
Yeah.
And so the thought process, maybe I have a personal vendetta against that system.
Yeah.
Because you think about all these people who are non-accredited working their tails off to make ends meet, and then the federal government is keeping you from being able to make wealth when you really need to make wealth.
Yeah.
And so that's kind of how we got started. I'll let Mirza answer the rest of the brainchild.
I love that so far. I mean, I think that's going to resonate with so many people because, I mean, we're all working our butts off. We're trying so hard, but the system does play well to, I mean, I hate saying it, but the rich get richer and the poor get poorer. I mean, we're kind of seeing that right now with inflation and all that. So this is awesome. Like, I'm so excited for you guys. So I want to hear more, Mirza.
Yeah, I mean, if you think about from a generational perspective, right, majority of wealth creation for baby boomers was through just buying a home. So they'd get out of college, they'd get a job or whatever they did, whether it was a trade or, they'd get that first job, get that first home, get married. And then over 30 years, that house would appreciate. And so when they say, most millionaires came from real estate, a lot of them did come from the primary residence. The problem we're seeing now is, for millennials, less of them have purchased homes. A lot more people are renting. And then for Gen Z, it's an exacerbated problem. So it's getting worse each generation. And a lot of that has to do with the affordability crisis in real estate.
Yeah. And so you guys are combating that.
Yeah, we're trying. If you look at real estate owners or investors in general, those that are under 30 years old only make up 7% of real estate ownership.
Yeah.
And so it used to be that everybody had this dream of, let's get an education, let's find a good job, let's get into the trades, buy a house and work that way. And then later on, maybe buy an investment property and rent it out and have these other sources of income. And then when you retire at 65 or whatever, you have, your pension that maybe your job used to pay, which is almost unheard of now.
Yeah.
And then you had other sources of income. Well, if people can't even afford their own home, the chances of them being able to invest in real estate and have secondary income from that is very slim.
Yeah. I heard something the other day, and it actually talked about Chicago. So, you being from Chicago, there was a Boy Meets World episode where Topanga and I don't remember his name. Corey. Yeah. Topanga and Corey, they wanted to buy a house, and they were talking with someone, and they said, this is an $88,000 house. And they're freaking out. How can we spend $88,000? So this guy went back and he did just a little bit of research. About $80,000 was the median home in Chicago at the time. And the median or the average annual salary was $44,000. So kind of, half of what a house would cost. So then he broke it down into months. It would only take 1 month of pay to do a down payment on the home at that time. And interest rates were around 7%, so, close to today. Mm-hmm. But today, with the price of food and the price of everything, vehicles, homes, it would take someone about a year to pay their bills and still save up to have a down payment on the home.
Wow.
It's very much skewed since the 90s.
Yeah.
Since 1971. When we went away from the gold standard.
Well, look at the last 5 years. You can't find a market in the United States where things haven't nearly doubled on
very
values
true.
of homes, and then you take interest rates and you take banks and all the added rules and things like that. It's getting really, really tough.
Yeah. So how can Casa Shares help combat that?
Well, just one point I want to make when we're talking about inflation is if you look at the stated inflation numbers, they don't include, in most cases, real estate. But then if you think about what are you spending the majority of your earned income on, it's either rent or a mortgage for your real estate.
Yeah.
So it's very interesting to see that those inflation numbers may look a lot less severe.
Yeah.
But the major component to that is not being included there. So bananas are included, but what do we spend more money on, bananas or real estate? And so that's just something that I think, people need to be aware of. And just to answer your question, how can Casa Shares help? If somebody is renting, let's say, right now, people don't know where their next job's going to be. So if they're renting, they may not even want to buy a primary residence. We're seeing a lot of people who, even if they have the down payment, they might not even want to live or commit to a specific location.
Yeah.
And so Casa Shares allows you still to get in on that, so you're not being left behind, essentially, but not having that responsibility of having to manage it, not having to worry about when things break, someone calling you in the middle of the night to fix it, those types of things. It's basically like the ability to invest from the comfort of your couch, pretty much.
Yeah. So I think when I first started, I hopped on the website, and then you guys have now developed an app. So really, someone can take their iPhone, or is it probably on the Google store as well?
Right now, it's just iOS.
Just iOS.
Yeah.
So they take their iPhone, or they hop online, they find properties, and they can buy shares in that property.
Yes, correct.
That's awesome. Like you talked about millennials, they're only 7% of owning real estate. This would allow every millennial a $10 share in real estate. right? Can you guys kind of explain what the app is and how it works?
Sure. Yeah. So it's actually the minimal is $100. So the
Okay.
shares are $10, but the minimal is 10 shares. And we tried to bring it down as far as we could to make it attainable to as wide an audience as possible. Really, how it works is you set up an account, right? You fund the account. So let's say you want to fund it with credit card or bank account. It takes about 5-6 minutes. And then essentially at that point, you're able to look through the different properties, kind of see what the plan is for them. Like what's the hold period? What's the, the rent that's being, currently earned by that property, some of the pictures, location, et cetera, financials. Once you decide I want to invest in this, it's a matter of just clicking a few times and it walks you through a little process. Now on the front end, we've made it super simple. So it's like a 5-minute process, but on the back end, the amount of stuff we had to build to make this work and make it easy on the front end, from regulations, we're SEC qualified, FINRA qualified, all the way through to, having everything communicate, with the third-party integrations. It's very complicated.
Yeah. I'll tell you from end user standpoint, it was flawless. It was awesome. To just fund the account, find the property, invest in it. I just honestly wish I could have done more.
Yeah.
So
we're glad to hear that. We wanted, and we worked really hard on the front end, being just as easy and clean as possible. We're still, there's a DocuSign portion right now, and we're working to remove that. So it's one less step.
Yeah.
And so it's all integrated into the system with our own signing features rather than having to go and do that DocuSign portion. So we say that it takes 5 to 7 minutes the first time you do it, but we want people to be able to jump on and buy additional shares in less than a minute after they're all set up.
Yeah, that's really cool. I like it from the end user standpoint, but also from the investor standpoint too. Because if someone they're wanting to develop a property and then put it out to market, how does that work?
So that's something we're definitely exploring right now. We've got a lot of interest from different builders and developers, people working on a wide range of projects. And so that's something that as we develop our user base, and so it's a balancing act between, what is the demand on the side of the users versus what can we put on the platform. Yeah. So it's going to be, we're going to have to balance that to keep that balance, but there's going to, the end goal is to have a wide variety of asset classes on.
Yeah.
So.
Well, and it makes sense that you guys would, in a sense, regulate who's coming in because, if you have 1 million users, but you have 5 million properties, now all of a sudden nothing's going to be funded to its full potential. So I like that you guys are thinking about that. 5 million properties, that's kind of a lot, but I was trying to use extreme numbers to
hopefully we get there.
Yeah. So far, what criteria do you guys have in place as far as the properties that are on there right now?
Yeah, we have to be really careful where we went through the federal government to not put promises on there for each individual property.
Yeah.
Right. So when we're underwriting these properties, we're looking at different factors. One, when somebody invests, they should be making money in 3 different ways. They should be getting dividends on a quarterly basis. And sometimes that takes a few months to stabilize a property.
Yeah.
And get it going. Just as if you were buying your own property, you got to make sure there's enough money in there if the dishwasher goes out and needs repairs. Above and beyond, we want to be returning dividends to all these investors. And if you put $100 in, we're talking pennies.
For sure.
But if you put $100 in for 3 straight years every month, once a month, then we're talking about dollars. And we just want people to start somewhere. The second way is these individuals who invest, they benefit from the appreciation of the property.
Yes.
Yes, there's risk that we would depreciate, but with real estate, you're looking at the long term, right? We're not trying to get in 1 month and then sell this property 6 months later. And so we really want rents to grow, and we want these properties to appreciate. And the last one is the investor gets to benefit from the tax benefits that come from owning real estate.
Yeah.
So really, everything that we've done is we want our investors to feel like they are the millionaires or billionaires, getting all these benefits from being real estate investors.
Yeah. Well, and I truly believe if you start to get the mindset of a millionaire and a billionaire, like even if they start with $100, they're a real estate investor. That's not something that would have been that they would have access to a year ago. Now they do. You start to put yourself in that realm, you grow.
Yeah, you start thinking differently.
Yeah. Yeah, I love that. So we're pretty heavily invested in cryptocurrency, and how we've gotten there is just reoccurring weekly buys. Do you think that's something you guys could do in the future? Like, I mean, I know that's total hypothetical, but if it was just a reoccurring, $100 a week, $50 a week.
Yeah, so that's a really interesting take, and we've had a lot of discussions around that. So as it is right now, as a new property comes available, we'll notify all of our users of the new property, and they can go and put whatever they would like to put into that one. What we think in the future is really having something around where essentially they could set up a monthly amount that they would like to invest. And we see a future where they could put in different parameters, where they could say, this is the kind of location I'm looking for. I'm maybe more focused on, dividends, or I'm more focused on potential long-term gains. And then really the machine, essentially, right, making a decision for them.
Yeah.
Now, where we run into some complications in the short term is there's a lot of, because this is a very relatively new space. Crowdfunding is a $16 billion industry for real estate, and it's growing at 45% a year. But there's still a lot of gray areas. So it's a lot of work from a legal perspective to figure out how do we get an agreement put together that would allow us to basically have power of attorney to make those trades on behalf of an investor.
Yeah.
Right?
That makes sense.
And so we are definitely interested in pursuing that, but we have to be really careful how we do it.
Yeah.
And so it's going to be a process.
Yeah, that makes complete sense. So for right now, listeners need to say, hey, Siri, remind me to buy $100 every month on the 3rd. Like that's
Exactly.
Pretty much.
And another thing is when we have multiple properties on, we may have a nightly rental property
yeah.
that would produce more income, but would maybe be considered higher risk
For sure.
because it's a nightly rental. And then we would have, just a door in a multifamily property that would be a safer bet. And then we might have a small commercial project.
Yeah.
And so we want them to be able to jump on and say, I really like this Airbnb property in Hawaii.
Yeah.
It really speaks to me. And they take ownership of those shares and they feel good about what they purchased.
Yeah. No, I love that. We haven't put a ton into it, but at the end of the summer, summer's good for us. Winter's not as great. I just keep thinking what if you buy 100 shares here and 100 shares there? At what point can I own like a quarter of that property? It's just, it makes your mind go, and it's really like you guys are onto something. And I love it, and it makes me excited for you, and honestly excited for me because I get to, we have a fourplex, but that we kind of lucked into it. It was an estate sale. My wife found it on Facebook. We got it for a really good deal. We went in, we worked on it, and now it produces income, but we kind of lucked into it. With Casa Shares, you don't have to luck into anything. You just pull up your phone and you've got an extra $100. Now you own a little piece of real estate.
Yeah, that's the hope. And the other thing that we're starting to realize is we built this one-dimensionally. The things that we've talked about today was the focus when we built this. What we're finding is now we have all these developers who are coming to us saying, hey, if I don't have to list my properties, if I don't have to pay real estate commissions, if I don't have to wonder if there are going to be enough people to buy these properties at the end of the day, it's a huge benefit to them. And so now we're starting to see that we're somewhat the Amazon of real estate.
Yeah.
We have created a marketplace where we will have investors who want to invest in real estate, and we're going to get that number higher every day that we have new investors, and those investors tell their friends and family. And so we're going to hit this critical mass where developers will pay us money to get on the system, right? And so we're creating a marketplace where we're benefiting both the end investor and the developer.
Yeah.
And if a developer knows that, hey, Casa Shares is going to take down half of the doors of, 100 door project that they're doing, multifamily or townhomes, it starts to get people to develop more. We're here in Rexburg, Idaho right now, and we have a lot of desire to help Rexburg grow.
Yeah.
Part of the reason why I feel like my family was brought back to Rexburg, we feel very strongly that this area is going to take off.
Yeah.
And so it's a great place for us to start. But really, all up and down the I-15 corridor, we have so many opportunities.
Yeah. Well, I've said Pocatello to St. Anthony is going to be Provo to Ogden. It really will be the same thing. Now, I love small towns, so there's a little part of me that's like, dang it. But from a business sense, just enjoying adding value to customers, we're going to get a lot of customers.
It's true.
So it's fun in that respect. What's also really cool about what you guys have is you can almost like project test in this area, but then like you said, Hawaii or Puerto Rico, just it can kind of go everywhere. Island Park, and it's really vast. I love what you guys have. So I'm going to stop saying that I love what you have because at this point, that I like it.
Well, we love that you love it.
It was just exciting. I believe that we live kind of in a society that's not promoting doing what you guys are doing. You're forging something that hasn't been done before. And the more people that can listen to podcasts like this and see that there are people like you guys that you're kind of going against the grain. Like, honestly, there might even be some real estate investors who are like, dang it, they are about to take out my business because it's different. You're allowing a lot of people to get on and make it happen. That's what the internet did to a lot of big box stores.
It's true.
Is it positive? Is it negative? It's just neutral. It is what it is. And you guys are doing it. So I just would hope that people can listen to this and go, hey, I have an idea, then I can make that happen as well.
Yeah, absolutely.
So not to get really personal in your guys' lives, but where did you guys all come from? Like, talk about your childhood a little bit. This is the fun part of the podcast where you get to know each other a little bit. Where did you guys come from? What did you do? What did you want to do in your life? And now you're doing something completely different because I doubt that you thought as a kid, I'm going to make a real estate app.
Right.
Sure. So I was born in Chicago and moved to California at about 9 years old. And then my dad, he worked around different states. So we traveled a lot. I changed schools a lot. So I've been in Alabama, New York, Oklahoma, and of course, Chicago and California. And for some reason, we just keep going back to California. That's where I'm right now. So getting into, I was involved in real estate for a little bit. And I have a brokerage on the side. It's kind of like a friends and family thing that I do. And then got into the tech scene. So I worked at Oracle for a bit. And I worked in the utility space. So like a lot of stuff around like home energy reports and that kind of stuff. Like when you guys get those reports showing kind of your usage, how you could save more energy. And there was a lot of behavioral science involved in that work as well. But what we were seeing is, so I got my first condo for, at the time it was like $377,000, but I didn't have the down payment for it. So what I did was I basically represented myself and I put 5% down. Then I borrowed the money and then I paid myself back from my real estate commissions.
That's awesome.
So all this stuff, like understanding loans, because I did loans for a little bit and I was doing the real estate, understanding all this stuff allowed me to do something that a lot of the people around me, a lot of my social circle couldn't do it at the time, right? And needless to say, this is before COVID, before like the prices like doubled basically, and the rates were low, right? 3%-ish. So getting into that, I realized really quickly, even if you're working like, let's say a tech job and you're making good money from the standard of like averages across the nation, right? I was seeing nothing from the job after paying bills. It was just gone.
Yeah.
Because the expenses kept going up, especially after COVID. But you look at the real estate and it's like, well, that real estate's gone up hundreds of thousands of dollars, just that one unit. and the rent has now exceeded, so it's cash flowing, even on 5% down.
Yeah.
So we got a second condo, did kind of the same thing. Then I did like another one with my dad. It's like a little joint venture. And then we started really realizing, my wife and I are talking about this. This is where the money's really made, is the work just pays for your life.
Yeah.
And the real estate is really your future.
Yeah.
And so that's why I got really passionate about this space. And then when I was able to sync up with McKay and his real estate background, it just made perfect sense. It was like, let's make this available for everybody.
Yeah. How did you guys meet?
Yeah, we had a mutual friend that he knew Mirza through some LinkedIn interactions, and I had moved back to Rexburg, and we were trying to start up an angel investing group here in Rexburg.
Yeah.
And ultimately it it never came to fruition.
Yeah.
Right? We just had busy people, and maybe it still will. But Mirza made a trip up here, and we met, and he had some ideas, and some of his Oracle background and some of his expertise mixed really well with some of the things that I was passionate about. Fractional ownership is something I've been talking about for years, because whether it's going to, our family loves to go to Hawaii. We go there usually at least once a year. But we go to St. George, and we go to Las Vegas, and we like different places. We like to get out of Southeast Idaho in January and February when you just can't stand the cold anymore.
For sure.
But if you buy a house in those places, you can't always use it.
Yeah.
We, just like you, we've got kids in school. And so there are certain times we want to vacation and do things, and having an investment property somewhere like that is tough when you have a lot of other responsibilities. We're not 75 years old and retired and can just go hang out there all the time. So when you talk about bringing other people in, maybe you grab 6 friends and you go buy a condo in St. George, and you each, share the usage or do nightly rentals when you're not using it. And so anyway, we kind of put those ideas together and started mulling this over. And then we found this path. It was actually during the Obama administration that they opened up this small window of opportunity where somebody could go to the SEC and ask for the exception that we were ultimately granted.
Cool. Thank you, Barack Obama.
Yeah.
Never thought I'd say that. No, I'm just kidding.
Yeah. You know more about that.
Yeah, so it's a Regulation A offering. So there's a few types of Regulation A offerings. There's a Regulation A Tier 1, which is called a Reg A, and there's a Regulation A Tier 2, which is called a Reg A+. Essentially, the differences are kind of like just minor, and they revolve around how much you can raise on a rolling annual basis. So for us, like in our circular, we could raise $75 million on a rolling 12-month basis, and we can raise it from non-accredited investors. There's some other things that we have to do behind the scenes as well to comply with all 50 states. We've got to file blue sky filings in every state. We've got to have a broker dealer. We have to have a alternate trading system, or an ATS, because if you think about it, like when you're buying stocks, for example, or you go onto like a Robinhood, for example, you have that array of companies you can invest in, and it's basically a marketplace, the stock market, right?
Yeah.
But these alternative assets are not on the stock market, so you have to facilitate that on something, and that's where an ATS, or alternate trading system, comes in. So we are working with the largest one for this space. They're based out of Utah, and that allows us to basically perform those trades or those transactions on that alternate trading system.
Okay.
On the back end.
Yeah. Yeah, that's what's also cool about this, is there's so much that goes into it, but the end user doesn't even have to think of any of that. It's kind of like we have a CrossFit gym. What people like about CrossFit is you show up and it's all done for you. You have to do the work, but the workout is there. You have a coach. It's kind of how I see this. It's like, I want to be a real estate investor, but maybe I don't know how. I don't need to know how. I just need to show up, find the property that property might resonate to me. That's the one I want to invest in.
I think a lot of people look at real estate as a difficult thing to get into, because first of all, you've got to have usually a good down payment.
Yeah.
right? Not everybody is a real estate broker and can pay themselves, but this is not a normal, situation to have. So you're going to have a down payment. You're going to have to understand the market. A lot of people are scared. They might even have the down payment, but I get so many questions from friends like, I don't even know which house would be good.
Yeah.
And then there's kind of like the fear of what if they were to buy, let's say, a rental property, how do I manage that? Like, people's lives are already so busy.
Yeah.
People are already, trying to make it through the day, because the life in this world has become so complicated now with everyone working second jobs, third jobs, trying to make it. So people don't really have that kind of extra time just to like try to figure out something. And the risk to reward might not look that good to them.
Yeah.
Yeah,
that makes sense. So this is completely hypothetical. So like, you don't need to talk about the future and what you're going to implement and everything, but have you thought about AI so far? How you could build possibly an AI bot that is actually helping you choose the perfect properties for the perfect target audience? Anything like that?
We've thought about it more on the front end, like a robo advisor feature.
Yeah.
For that, but there's definitely a space for that. I could see that, especially looking for specific trends. So let's say you've got you want to classify things into people who are looking for specific outcomes, like more rent or more capital gains or locations. I see a potential for that.
Yeah.
But I think from an application purpose, because a lot of the real estate is kind of on a macro trend, right? So like right now, pretty much anywhere you buy real estate, for the most part, in a 10-year period, you're going to win.
Yeah, absolutely.
So I think a lot of it comes down to what is the person's personal preference? What are their individual goals? And so focusing on AI first for like a robo advisor feature would probably be more relevant. But if we hit that type of scale where it might actually make sense on the selection process for the properties as well.
Yeah, I saw there are a couple AI chatbot agents, and they are helping find the target audience for real estate for realtors. So right now, a realtor puts something out, and they go, I don't know, let's just throw it out on the Facebook Marketplace, or let's do some targeted Facebook ads. Now it's saying, well, according to this property, you should probably market this to 35 to 45-year-old males that, so-and-so, such and such, and then they can market directly to them. So it's pretty cool.
It's very interesting.
Something that I'll mention, we met with a group yesterday that kind of opened our eyes to a little of where this might work. On a macro level, you could say in the United States, most of the deals that are posted by a realtor or broker group sits in that 5.5 to 6.5 cap rate, right? And you can find those deals pretty much all day long. But this group, they are out there finding the 12 to 15% cap rates. They just put a fourplex yesterday under contract for $370,000 or something along those lines in Boise. And they are building similar. They're using AI to find these areas, and then they're really delving in. I think we're just scraping the surface with the AI.
Oh, for sure. I keep saying 2025 is the year of AI to 1997 was the year of the internet.
Exactly.
Like, I really think we're there. Did you say they bought a fourplex for 300 and something thousand?
They did.
That's insane.
Yeah, and it needs a little work, but the rent's coming in right now. They were over $4,000 a month on that particular property.
When we first started looking at real estate, it was probably 15 years ago. My wife's uncle owns several complexes, and he said, don't look at any property unless you can get it under $50,000 per door. And that's always been in my head. So fourplex is going to be $200,000. It can't be more than that. Mm-hmm. And now you look up fourplexes and you're like, that's $500,000 or that's $600,000. It's crazy.
It is. And some of these new fourplexes, even here in town, are $700,000-$800,000.
Yeah. So, I mean, from like my standpoint, my little real estate investor standpoint, I'm like, that doesn't profit for 50 years. Mm-hmm. So that's tough. But Casa Shares fixes that.
Yeah. Yeah, that's the big thing. The other thing that an investor should think is when we're buying individual doors right now, we're not servicing any debt, right? So if it's a $300,000 condo, we're raising that money. We're not servicing debt. So right out of the gates, it's profitable from the rental income that's coming.
Yeah.
Later on, it would be better off on a larger asset. Say we buy a multifamily property or a student property or something like that, to encumber those and to put leverage, because then the investor, puts less cash forward and anyway, we're not there yet.
Yeah.
But when we hit our stride, we will be using debt, but
Yeah.
door by door, it doesn't make sense right now.
But for the listeners, what you're saying is when they're investing in something, there's really not a lot of risk. I mean, there's always risk, right? Because they're investing, but there's not a lot of risk because that's going to be a paid for property. And so that's, I think, important to know. We're not throwing this in there and then going, I hope the bank doesn't default if we can't get renters.
Exactly.
It's paid for.
Yeah. So if we pay $300,000, but I feel like our country's going through a little bit of a detox right now.
For sure.
Stocks have started going down, and I think it needs to happen to get us back to reality.
Yeah.
But say the housing market drops and that house is now worth $280,000. Yes, today it's down a little bit, but we look at the 5-year, the 10-year, and we know that it's going to bounce back and that it's going to get healthy rents again.
And it's still cash flowing.
It is. And the rents don't change.
Yes, exactly. Yeah, rents probably will not go down. It's just like labor costs, even if we do have a deflationary state, which could happen depending on what the Federal Reserve does, and if we ever get backed by something like gold or Bitcoin or whatever, it could deflate. But if you already have that property and it's cash flowing, that's kind of the key.
I read this morning when I woke up, I was reading this thing about Warren Buffett, and the stock market went down one day, and this journalist came up and said, "Oh, can you believe you just lost, tens of millions of dollars in one day?" And he said, "I didn't lose a penny. I didn't sell my stock."
Yeah.
The same way that if it goes up, by 30, 40 million tomorrow, I didn't make that money because I didn't sell my stock.
Yeah.
This is a long game. You can't look at individual days. Everybody wants to talk about Elon Musk this week and how many billions he lost because Tesla took a dip.
Yeah.
He didn't lose anything.
Yeah, he probably slept just fine.
Yeah.
Yeah.
If you look historically, right, all the big crashes that we've had, real estate crashes, it doesn't really matter on a 10-year timeline.
Yeah.
So there's never been a 10-year timeline where a specific asset, other than maybe that specific asset having a problem.
For sure.
But overall, any market has gone down. It's only been up over those 10 years.
Yeah.
So.
Yeah, I love that. So what's the future of Casa Shares? I know you guys have kind of said some different things, but what's your ultimate goal? What's it going to look like in 10 years? And we can edit out all the pauses.
Okay.
Just kidding. You're good.
Yeah, that's a great question. We've built a tech company. If you're looking at tech companies, they usually sell out 3 to 5 years, right? If they have a good idea, they'll take on institutional money at some point, and these venture capital firms will blow them up and sell them off.
Yeah.
We have a mission behind our company, and it has been all along, right? Mirza is a great guy. Both of us agree on one thing. Money is a tool. And if we were hyper-focused on money, then we might be looking at a huge sellout in that 3 to 5 years.
Yeah.
But where we have a mission behind what we're doing, we want to allow as many people as possible to get started in this real estate realm. If you focus on a mission and you don't focus on the dollars, I've always found that the dollars follow. If you're doing something worthwhile, if you're being honest as you do it, and you provide a service to somebody, the dollars will follow. And so we know that we're actually not far from profitability, which is also very different from most tech companies.
For sure. Yeah.
And when we've met with, I'll just dump this in real quick. We went to Boston to present to a bunch of venture capital firms in December. We were asked to come.
Yeah.
And it was an eye-opening experience, right? And these venture capital firms, we thought we're going to have to go and prove ourselves and say, hey, this is going to work. We promise, right? And instead, they saw the value in what we were doing, and they wanted a company like ours to sign on with them.
Yeah.
And we backed off very quickly when we realized that this institutional money comes with handcuffs.
For sure.
And when you go that route, you better know why you're going that route.
Yeah.
So if we were to sign on with a venture capital firm, it's because they have the end game in mind.
Yeah.
And they can get us to blow this thing up really fast, to have a big sellout, and we walk away super wealthy.
Yeah.
Right. Instead, we took a step back and said, this is not why we built this company. This is not why we have been helped along. We feel like there's higher reasons and benefits to people in the future. So,
Yeah.
so 10 years from now, I believe that the two of us will still be leading this company, and that we will be a household name.
That's awesome. No, I love that. And I agree with you as far as money's a tool. Money's also an amplifier. So if Mirza and McKay, you're handed $20 million, it just enhances what you can do with that $20 million. If you're a crappy person, it also enhances what you can do with that.
Very true.
So it really is a tool. And I love that you guys have that long game view and the idea of adding value and a service to people, because people really do need it. And they don't have the experience and the knowledge that you guys have gained through building this. And so you have something very unique, something very powerful, and you can use that, that power for good. What did Spider-Man's uncle say to him? With great power comes great responsibility.
Absolutely. Yeah.
Honestly, in a way, in a pretty big way, you guys are about to help millions of not wealthy people yet. They're not wealthy yet. You're going to help those people to become wealthy. That's amazing.
Yeah, we hope so. Real estate, in my mind, is all about a snowball. And you have to start somewhere. But once you get that snowball rolling and gaining momentum, it's amazing what it can do. And the same way debt can roll you the other way.
Yeah.
Right? And the more debt you get in, you can really just choke yourself out of opportunities. So if somebody can start even with pennies, as dividends, but they start putting a little more and a little more and a little more, what's $100 today that they put in, could be tens of thousands in the future.
Yeah.
And that's the hope. We want people to see that, and it's contagious. If you look at something every day and you have those positive thoughts of where you want to end up and you're doing something about it, you will go so much further in life. My wife and I have a piece of paper that early in our marriage, I borrowed $5,000 from my dad to buy a vehicle. And I had $2,000. He gave me the $5,000 and he said, just don't worry about paying this off immediately. You're a newlywed couple, and I was happy to help you. He knew I was going to pay him back over time, but I jumped on the computer and I made little $50 squares.
Yeah.
And I put it on my bathroom mirror.
That's awesome.
Right, in our house. And so every time I was brushing my teeth, at least twice a day, I was staring at that paper. And my wife was brushing her teeth at the same mirror, and she was looking at that twice a day. And we had jobs. We had our first home, but we didn't have a lot of extra income after that. But it became a fun thing for us to do, to cross those squares off.
Yeah.
And to pay my dad back faster. And we ended up paying him off in, I don't know, maybe 4.5 months, which didn't seem possible at the beginning. But we have used that in our marriage and in our lives to say, if something's important and this is something we want to do, we're going to put it right in front of us. We're going to stick it on the wall in the shower. We're going to make it a part of what we see every day so that we have fun doing it at the same time.
Yeah.
I think from the perspective of younger people too, right? There's a sense of hopelessness because they see these assets, small houses. Like, for example, where I live in the Irvine area in Orange County, there's 2 types of properties being built right now. And the first one is like $4 million plus homes, which are pretty much the single family homes that are being built.
Yeah.
And then there's the apartment complexes, which are like gigantic complexes with they're very nice. They're luxurious, well planned out, but they cost what, $3,000, $4,000 a month for an apartment. So even for these youth coming out of school right now, they're getting into these apartments. They need to shack up with another roommate, or it creates problems that are longer lasting than only the cost up front.
Yeah.
Because then it's harder to get married, for example. It's harder to start a family. It's harder to do the steps in life that were easier for previous generations. And so part of this is, let's say you invest $100 to start. Is it going to make you rich? No, it's not. But what it's going to do is it's going to get you on that start. And that's really what we're trying to do, is it's putting people in a position where there's a shift in their mentality. Because they start doing that, other opportunities, even outside of Casa Shares, might come available to them because they're going to be thinking differently.
Yeah.
So it's not just about what they're going to gain from a financial perspective. It's taking accountability for their situation too, because we know that the cards are stacked against the youth, and so that's really, personally for me and McKay, that's something that's very important for us to try to at least do what we can to help in being part of the correction of that problem.
Yeah. Yeah, I love that. We employ a lot of college students, and they're all great, but it is sad how a lot of them are going through school right now and they go, when I graduate, I'm not making enough money to even pay my student loans. Like, I guess I'm going to go get a master's program. I'm like, well, that gives you more student loans. Yeah, but then if I get my doctorate, I can go teach, and then I'll make enough money to pay back my student loans. I'm like, is that what you want to do? No, it's not what I want to do at all. There really are some cards that are stacked up right now. But I think what you said, taking responsibility, knowing where they can go, shifting that perspective just a little bit, they can kind of get where they want to be. There's a book here, The Success Principles, and it's actually how to get from where you are to where you want to be. That just popped in my head as I was saying that. But I love what you guys are doing with this. And speaking of books, just to kind of close out the episode, in relation to business and mindset, what's for each of you, what's one book that you would recommend to listeners?
I'm going to start off with Smart Cuts. I believe the author is Shane Snow. The book starts right here in Rexburg, Idaho. And my whole life, and maybe to answer one of your questions before, maybe I'll just include a little bit of my childhood as well.
Please.
I grew up in Sandy, Utah. My dad was an attorney. He got a law degree from BYU. He was an FBI agent, got married a little bit later. But he went into his own private practice and realized how taxing that was on our family, right? And so then he ended up taking a job with the state of Utah and worked under the Attorney General. And he was more of a 7 to 5 worker so that he could be home.
Yeah.
He could coach our teams, right? And so there was a lot of sacrifice that he made. My mom was a radiation therapist helping cancer patients with radiation treatments. And both of them just had a very high work ethic, right? I'd watch my dad, walk out of the house in a full suit every day. And he did his, 35, 40 years of that, and then retired, right? And I don't want to say, I didn't know how to explain it to people, but I could never picture myself sitting at a desk and doing a job every day like he did, right? I don't think he loved it, but he did that for our family, and he was very devoted to that. But this Smart Cut book has really spoken to me because I used to think of that I was shortcutting my way through life.
Yeah.
I didn't want to sit at a desk, so I was trying to find ways to jump over that whole portion and say, how can I make money? How can I support my family and my 5 kids and do that without having to go punch the clock every single day?
Yeah.
Well, the Smart Cuts book talks about this mentality, and maybe you played the Mario game early on the original Nintendo, but there are like warp tunnels where you could go to different levels. You didn't have to go to level 2, 3, and 4. If you knew the trick, you could go all the way to level 7. and you could beat the game faster that way, right? And so this particular book spoke to the way that I was thinking. You don't have to go to college.
Yeah.
You don't have to, right? I went to BYU, Idaho, got a business degree. I got an MBA from Utah State. All really great. But I feel like being in real estate and doing some of the projects, those types of things, like I got so much further ahead on learning things on my own and trying to do it. So I changed my mindset of I wasn't shortcutting life.
Yeah.
I wasn't cheating myself out of opportunities, but I was finding smart cuts that would allow me to get where I wanted faster.
Yeah.
And therefore passing on this generational, my dad, I mean, you go back to my grandpas, they did what they could to help my parents get to where they were.
Yep.
Right. I had a grandpa, my maternal grandfather, he was actually in the German army in World War II.
Oh, wow.
And my other grandfather was a Marine in the United States. So World War II, they were on different sides, right?
Yeah.
After World War II, my grandparents from Germany, they snuck from East Germany into West Germany across these territories so that they could immigrate to the United States.
Yeah.
So my mother is the only living sibling of hers that wasn't born in Germany. And so I've seen sacrifice from my grandparents who made some amazing sacrifices to come to the United States without knowing English, working really hard. My grandfather worked 3 jobs. My mom never saw her dad, and that was to give her the best. Mm-hmm. And then my parents did the same for me. And so I feel a responsibility to pass that on, not only to my kids, but everyone I come in contact with. So Smart Cuts is my book.
Okay. No, I love that. Thank you for all of that. And that's Marine and German Army grandfathers. Like, that's crazy. That's a great story.
Yeah.
It would be so interesting to know how close they got to each other, if there was some way to map that.
Yeah. My paternal grandfather, being in the Marines, he did spend a lot of time in the South Pacific. So more on the Japanese side of things, Guam, trying to keep those islands that were very critical in the Pacific Ocean, where my German grandfather, big difference between the Nazi Germans and German infantry, right? Where they were they had to join. Join
it was their country. Yeah. They felt a duty to do what they needed for their country. That makes total sense.
Right. But he was more marching around, into Russia and all these different places. So amazing stories on both sides.
Yeah.
So I have 2 recommendations. It's kind of cliche, but I'm going to say A Rich Dad Poor Dad by Robert Kiyosaki.
Oh, such a great book.
The reason I think that book is important and potentially, I mean, I've read books that have a lot more complicated content, and that's kind of a very simple book. Mm-hmm. And that's what I kind of like about it, is because I believe like sometimes the simplest things can actually be implemented easier, and actually you can use it to make change in your life. So Robert Kiyosaki's book, Rich Dad Poor Dad, what I really feel was I got out of that was the mindset of the explanation of like working for money versus allowing time to basically work for you, investments to work for you. And it doesn't have to apply necessarily to real estate. It could be really someone just putting their money in stocks or even oil wells or whatever they're investing in. Mm-hmm. But this book was about real estate primarily. And I feel like, that's something that everybody could really implement is understanding just the basics of how finance works, the basics of how taxes work. If you look at the kids, when they graduate from high school or even college, they have no idea how taxes work.
Yeah.
And that's where they could, it would be the easiest solution to just teach them some of these basic things, and it would create the biggest benefit in their life, right? So I think that book it's easy. Anyone can understand it. It's widely beneficial. So I would recommend that to anyone. Now, from a perspective of, because we're doing a startup.
Yeah.
So from the perspective of someone starting a startup, I read this book by Felix Dennis because it's called How to Get Rich. I bought it a long time ago. And I was just like, okay, so this guy created this big publishing company. I just want to see, what did he do? And so when I started reading it, I realized the entire book was basically trying to convince me not to start a business.
Yeah.
And so it was a really cool perspective to show you it's, what really goes into creating a startup. And now that we're doing it, we understand that what are the benefits, and we also understand what are the challenges.
Yeah.
And so if you're going to do it, you have to be really passionate about what you're building. You have to have a purpose bigger than just trying to build something big. You have to have a reason behind it to be able to push every day to overcome the obstacles that you will face, because especially in an area that's highly regulated, that's very an up and coming type of sector, there's going to be a lot of problems that you're going to have to figure out and fix that you wouldn't encounter in a regular job, even a tech job.
Yeah.
So you have to be mentally prepared. And I just thought that book was a really good wake-up call, because looking through Felix Dennis's story of how he started Dennis Publishing, that guy came up with solutions throughout like some of the most difficult problems that most people would have just dropped it.
Yeah.
And so that's been very beneficial to us. So when we've had a few things that we had to figure out, we were able to get around it, and I think it was a mindset thing.
Yeah.
So
No, thank you for that. I had told you guys that I used AI to help kind of research Casa Shares and everything, and it kicked out one question, and the question was, ask them what's the biggest challenge that they've had to overcome. And I honestly skipped over it because just knowing you guys pretty quickly, it doesn't matter what the challenge is. Like, it could be the biggest challenge out there, but you two, you're going to tackle it.
we'll just build a bridge.
Yeah. Yeah, that's awesome. Yeah, I love that. And Robert Kiyosaki, like that is one of my favorite books. And then we like Robert Kiyosaki. The two on the right, those are both him. The Cash Flow Quadrant, and then The Conspiracy of the Rich. Like, they're just good. They just get in
Good
there.
books.
Shows the difference between a job, a business owner, a manager, an investor. It's great.
I don't know if you've done this yet, but your kids are very similar ages to mine. And on Sundays, a lot of times we're trying to figure out, we try to make Sunday a little bit different than the rest of the week, right? Yeah. And so we've started taking some of these books, How to Win Friends and Influence People, and giving them sections to read.
Yeah.
And some of these Robert Kiyosaki, it's easy for these kids to understand, but the sooner they learn these lessons, the sooner that they will be contributing members of society.
I agree. It's interesting because me growing up, I think our parents were similar. My dad, he's amazing, and he showed me work ethic. I mean, he always, worked, or on weekends we would be helping somebody. It was like roofing my aunt and uncles, or whatever it was. So growing up, I just figured, well, I'll just get a job too. Like, that's what I'm gonna do. Never in my wildest young dreams did I know that it wouldn't be anywhere near a 9-to-5 job. So it's interesting to see my kids and how they view it. They don't think right now, like, I'm gonna go get a job. A lot of times they think in like an investor, and they'll hop on Alibaba and they're like, I'm gonna order something, I'm gonna sell it. And then they start looking into it. They're like, bucket hats. Those are so popular right now. It's just cool. Like what you guys are doing with Casa Shares, teaching young kids, millennials, to just think differently. Like, we do not have to live where we go to college, get in a bunch of debt, get a job, contribute to our 401k, and then retire. And the statistic is like, you retire and you die 6 years later. Mm-hmm. Like, that's what happens. We don't want to do that.
It's true. You got to live today.
Yeah. You guys are awesome. I appreciate you chatting. I just appreciate you guys.
Thanks for letting us
Thanks
come
for having
on.
us.
Yeah. Worked well with Mirza being in town, and
it's awesome. So how can people find Casa Shares and you guys?
Sure. Yeah. So our website is casashares.com, CASA shares.com. We're also available on iOS. So you can look us up in the App Store, just Casa Shares, and you'll see us right there.
That's awesome. And now, can people download the app and just start looking through everything without becoming an investor? And that's kind of their, introduction, or?
Yeah. So when you download the app, you can see everything that's available, all the assets. You can see what's sold previously as we start getting rolling here, and what's going to be coming up soon. And then, to actually invest, you'd have to create an account, but it just takes a couple minutes. So it's a pretty easy process.
Yeah. I mean, from personal experience, it was a very seamless process.
Yeah, the part that takes the longest is just hooking up your bank account.
Yeah.
But we did it a little bit differently. We we partnered with Plaid as far as being able to hook to your bank account. So somebody goes in, they choose their bank, and then they just log in like they were logging in on the website. So they don't have to find a check and get all their routing number and account number. They find it, they log in, and they choose, I just want to attach my checking account. And that's the majority.
Yeah.
They put in a little bit of information, and boom, they're a real estate investor.
That's so cool. Well, thank you guys. Let's revisit this in about a year and see where you're at.
We'd love to.
Awesome.
Sounds good.
Thank you guys.
Thanks for having us.
Yeah.